Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name's Manpreet and welcome to Cut to the Chase. Now it's the first full week of the second quarter of 2022. We have a packed week ahead in terms of market signals, macro events and data, so let's jump right in. Now, from an equity market point of view, quite a few reports that crossed my desk over the weekend were very focused on two things specific to US markets. The first was that the S&P 500 is now back above the 200-day moving average over the past full week. Now, this does brighten the near-term outlook and naturally raises questions on whether the worst is now behind us, at least from a technical point of view. The second thing is seasonality. Now, several reports pointed out that April is a seasonally strong month for US equity markets, with markets up about 3/4 of the time since the 1960s. Now, this doesn't guarantee a strong outcome, of course. A behavioral scientist would remind us that this same data point means that markets are down about 1/4 of the time, but it certainly offers some room for optimism after what's been a pretty volatile first quarter. Now, staying with the US for a moment, on Friday we had the release of the key US employment report. Many of you already know that the report was a strong one. Now, more than the headline numbers though, it was the fall in the unemployment rate to 3.6% and the continued wage growth that markets focused on as signals that the Fed was likely to plow ahead with its interest rate hiking cycle. Now, this report does mean that this week's focus is likely to be firmly on the release of the minutes of the last Fed meeting on Wednesday. We've had a lot of public comments from Fed policymakers over the past couple of weeks, but this will be the main opportunity to gauge the discussion and consideration of scenarios at the policy meeting itself, and to gauge whether markets are justified in the pricing of interest rate hikes. And for context, after the jobs report, markets were expecting about a 75% chance that the next rate hike in May would end up being a 50 basis point rate hike. Other than the release of these minutes though, it is a relatively quiet week in the US, at least from a macro data standpoint. Now, over in China, the Securities Regulatory Commission on Saturday reportedly said it would amend laws that prevented its overseas listed companies from providing data to foreign regulators, saying existing rules had become outdated. Now, this is a key development because you may recall it was fears that Chinese companies would be delisted from US exchanges for not fully disclosing audit data. That was one big driver behind recent equity market volatility. Now, negotiations between US and Chinese regulators are likely to continue, but this could set up regional equity markets for a much brighter start today, possibly helping overcome the relatively weak PMI manufacturing survey data last week. This week, of course, in addition to this, we have the private sector Caixin PMI data set for release, and elsewhere in Asia, several other markets are also set to release PMI activity data, and of course, Australia's RBA is set to set policy rates. Finally, before I end, I wanted to point out that my colleague Audrey released a Talking Thematics podcast last week where she digs deeper into how the evolution of the metaverse could start to throw up investment opportunities. Now, I did my part this weekend by checking out a virtual reality gaming arena with my son, so have a listen if you haven't done so already. Take a pause there. If you enjoyed this podcast, please don't forget to rate and like it. Thanks again for listening. We wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.